We welcome you to our classes that is being conducted by our YouTube channel SL Account School. Today's topic is year-end adjustments. Year-end adjustments are made in final accounts to show the true view of their transactions. They are closing entries or amendments made in the books at the end of the accounting period in order to match revenue with the expenses. Even though this is known as year-end adjustment, this is rolling over from one period to another and the new period to have a fresh start and ensuring all revenue accounts are starting with zero balances. The adjustment transactions represent such items of income and expenditures which relate to the current year and have not yet been brought into the books of accounts. These transactions which do not appear in the first trial balance are to be noted as adjustments. However, the correcting entries made are real and part of double entry. Let's look at some of those adjustments which we often come across. First, accrued expenses. These are expenditures incurred or occurred, but payments yet to be made. Are obligations and firm commitments which need to be satisfied in the subsequent period. Until such time, these will appear as current liabilities in the balance sheets. Next, accrued income, money that have been earned but has yet to be received. This principle seeks to match revenues to the period in which they were earned rather than the period in which the cash was received. In applying this, care must be taken to see no infringement of revenue recognized principles take place. Next, prepayments. Here the amount have been paid for which services or goods yet to be received, which may be received in the subsequent period and will remain as an asset. Deferred expenses are similar to prepayments, will be a long-term advance which may run into several accounting periods. Next one, deferred revenue, also known as unearned revenue, refers to advance payments a company receives for product or services that are to be delivered or performed in the future. This will remain a liability until such time is fully or substantially earned. At that time, it will be converted into income. There are other year-end adjustments such as depreciations, closing stocks, provision for bad debts, writing off, etc. This we are hoping to deal with a separate lesson. Hope the students have understood. Now we will go into a few questions. In this class, we are going to give more emphasis to exercises than theoretical explanations. Now the question, rent paid in 92 for the year to 30th September 93 was 1,200 and rent paid on 1st October 93 for the year to September 94, 1,600. Rent payable as shown in the profit and loss account for the year ended. Please note the date, 31st December 93. Four options are given. Since the account is ending in 31st December, the first payment made in 92, 300 only refers to that period. The balance will get pushed to 93. Which is 900. The payment made in 93, only 3 months come into the current period, balance get pushed to the following period, which is 400. Therefore, charge to the profit and loss account is 1,003. Therefore, the answer is C. Another question, an organization's year end is 30th September. On 1st January 96, the organization took out a loan of 100,000 with the annual interest of 12%. The interest is payable in equal installments on the first day of April, July, October, and January. Mark the word in arrears. How much should be charged to the profit and loss account for the 30th September 96, and how much should accrue on the balance sheet? We will take a logical approach to answer this question. Since the loan was there only for 9 months in the current period, it will be 9,000 interest, thereby eliminating the option A and D. Since the payments are made on the first day of next quarter, 30th September, there will be accrual expenditure of 3,000. Therefore, the answer is B. MCQ. During the year, 4,000 was paid for motor expenses. At the end of the year, the charge to profit and loss account was 5,000 with an accrual of 2,500 in the balance sheet. What was the last year's balance shown in the balance sheet? Let's look at this T account. Cash paid 4,000, transfer to profit and loss account 5,000, provision for accrued expenditure in the end 2,500, and therefore the difference is 1,500, which obviously represents the opening balance or the opening accrued expenditure. The answer is A. The next question, a company includes in inventory goods received before the year end, but for which invoices are not received until after the year end. This is in accordance with A, the historical cost convention, B, the accrual concept, 3, the consistency concept. Answer is B. A is talking about the valuation, C is talking about uniformity of application. The next question is, on January year 1, H paid an insurance invoice of 2,500 for the year to 31st May year 2. 7 months are for the current year, 5 months are for the following year. Therefore, the answer is C. The next MCQ, the following information at 5th January year 3 relates to a club which has a year end of 31st December year 2. Please look at the question at the bottom where it says what amount to be credited to income and expenditure account. Since it is a club, non-trading organization, this is similar to profit and loss in a trading organization. Subscription for year 1 unpaid at January year 2, 300. An accrued income, out of which in year 2, 250 was paid, leaving a balance 50 is to be written off since it is overdue after 1 year. With regard to year 2, subscription paid is 6,000, unpaid is 750. Therefore, charge to the income and expenditure account is 6,750. The answer is B. The next MCQ, on the first day of month 1, a business had a prepaid insurance of 10,000. On the first day of month 8, it paid in full the annual insurance invoice of 36,000 to cover the following year. What is the amount charged in the income statement, IS, and the prepayment shown in the statement of financial position, SFP, at the year end? Working opening balance, prepayment of 10,000, paid 36,000, carry forward 7 over 12, 7 months, 21,000. Therefore, charge to the P&L is 25,000. The answer is C. Further, look carefully. There is a prepayment of 10,000 and payment during the current year is 36,000. Therefore, it is 46,000. None other options are reconciling to this figure. Therefore, it should be clear the answer is C. The next MCQ, at 31st December year 5, the following required inclusion in a company's financial statement. On 1st January 2005, the company made a loan of 12,000 to an employee, repayable on 1st January 2006. Therefore, on 31st December, that will remain outstanding, a receivable, a current asset. There is a 2% interest, which is 240, which is paid along with the loan. Therefore, it is outstanding on 31st December, a receivable, therefore a current asset. Number 2, the company paid an annual insurance premium of 9,000 in 2005, covering the year ending 31st August 2006. For the current year, it's only 4 months or 1/3. Therefore, 3,000 will be current year, 6,000 will be prepaid for next year, a current asset again. Number 3, in January 2006, the company received rent from a tenant of 4,000, covering the 6 months of 31st December 2005. So this was outstanding on that day as rent receivable, there again a current asset. Therefore, total current assets 22,240, accrual nil. Answer is B. The last MCQ, the following transaction relate to Rashid's electricity expenses ledger account for the year 30th June 2009. Look at the T account. There is a prepayment of 550, cash paid 5,400, accrued expenditure carry forward to the next period is 650. Therefore, charge to profit and loss account is 6,600. The answer is A. We recommend the students moderate on further exercises to get more familiarity on the subject. Dear students, as you all know, these classes are provided to you by our YouTube channel SL Account School. We kindly request you to subscribe, share, like and promote it among those who are interested. Thank you.